How's it going, everyone? Mike Chazelle here with Century Residential, America's fastest growing military focused real estate company in the country. We're going to be covering a few topics today about your benefits, about finances. We're going to be talking about the impact that your finances and your benefits have in your life. Super, super important topic. Many of you know that I'm wildly passionate about the things that we're going to be covering here today. And I'm really excited to be able to present this information to you. A little bit more about me and my background. 98 to 2002 was a midshipman at the U.S. Naval Academy. If you want to hear stories about what not to do while you're at a service academy, please give me a call after this. I'm happy to fill you in with some stories. From there, went on to be Marine Second Lieutenant. September 11th was during our senior year. So the minute we hit the fleet, we were on deployment. Why I decided to shave my head prior to going on deployment, I don't know. This is a picture of me and one of the Brits that we served with outside Camp Fallujah. From there, after my service, went on to be a contestant on Survivor. The answer is no, I did not win, but I did survive. Great experience and had a heck of a lot of fun competing in Survivor. And then from there, went on to start a real estate company and focusing on veterans, realizing that there's a huge need and huge impetus for veterans to understand real estate. The numbers are not in our favor. We are not doing a great job in real estate collectively as an organization. Our sales team here in Southern California is top 1% in the country, and we've got amazing, amazing agents across the country that are here to serve you and help you. This is our map of Century Residential outposts. We're currently in 14 states and 33 markets. There are some phenomenal, phenomenal people. I don't even have enough time here to cover all the amazing people that are part of this organization. But if you're interested in connecting with a Century agent, or you're interested in becoming a real estate professional, serving the next generation of military, please hit us up after the presentation as well. Okay. Here's the reality. This is the cold, hard truth about where we are at as veterans and active duty in the country. 33% of veterans and active duty military don't know that they have a VA home loan benefit. 33%, 1/3 have not even been exposed to this information. So the fact that you're watching this is proof positive that you are not part of this group with 33%. But if you meet someone that is, you need to help raise them up and give them this information. Only 11% of military will use their VA loan in their lifetime. The American dream is real. Military have the access to it, but only 11% are using their VA loan benefit in their lifetime. Here's the numbers. The difference between a veteran upon retirement that owns their real estate versus a veteran upon their retirement that has given their BAH to their local base housing authorities or their landlords at their local duty stations. The difference in net worth of those two groups is 44 times. The average veteran upon retirement that is a homeowner has an average net worth of $450,000. The average veteran upon retirement that has been renting their entire career will have an average net worth of $10,000. It's, in my opinion, unsat. This is why we do what we do. Real estate markets are not something that are consistent. They constantly change. Information constantly changes. Benefits and nuances to your benefits constantly change. So it's super important to stay ahead of this information. But number one that we're going to be discussing today is home ownership, how to use your VA loan properly to purchase a home at some point in your career. Okay, so this is a slide that enumerates the difference in total net worth for homeowners versus renters after a 3-year period and after a 20-year period. There's 4 major things here that are functions for changing your net worth over time. Number one is you have a leveraged asset that appreciates over time. No matter where you go, if you're on base housing or you're renting a house or you own a house, you're paying a mortgage in some form or fashion. For those of you that don't know, the base housing authorities have been sold off to private investment hedge funds. These are private investors that own base housing, that if you deem it's best for you to be in base housing, and sometimes that might be the case and that might be best for you and your family, you're basically giving up your BAH, which is, aside from your VA loan, your number one entitlement that you have for wealth building over time. But your first benefit is you get the appreciation from real estate over time. If you take just the past 70 years, the average appreciation for real estate's 3%. It's low, but over time it grows. You also get to deduct all of your mortgage interest in what you're paying in a mortgage. 1/3 of your mortgage payment is going to go towards principal. So you're going to save that 1/3. It's in the form of equity or principal pay down. The other 2/3 of your payment is in the form of interest. You get to deduct all interest and all taxes in your real estate from your already low taxable base. Veterans don't get taxed on their BAH. They have 2/3 of their income is taxed. When you in turn use your BAH and apply that towards a mortgage, you're reducing your taxable exposure of income by about another third. Also, upon selling a home, when you opt to sell it and move on to the next, if you've owned that home as a primary residence and have lived in it for at least 2 years, all of your gain, all of your appreciation in that home becomes capital gains tax-free. We're going to show a couple examples in future slides of how that applies. But if, for easy math, if you buy a home for $250,000 over a 3 to 5 year period, it appreciates to $300,000. You take that $50,000 difference as capital gains tax-free. You put it in your bank account, you put it in investments, you put it in saving, or you apply that towards bringing down the mortgage on your next purchase. It's doing these things over time that help you gain wealth. There was a great quote by Albert Einstein. He said, "There's something that is more powerful than the atomic bomb." Hit me up in the chat and let me know if you know what that is. I'm going to give it to you. It's compound interest. The beautiful thing about owning real estate is you get compound leveraged appreciation over time. Here's a couple examples. And I know I'm taking a while on the slide, but it's super important that you look at the numbers here. Here's an example of owning versus renting over a 3-year period. The net worth variance, when you take everything into account, is $54,000. The assumptions here, California, we have higher price points. The assumption here is it's a $450,000 home that you put on a 30-year mortgage at 3.125% interest, and you just have the national average for property tax and insurance, and you've received 4% appreciation. Take those numbers, extrapolate them out to a 20-year time period, and the net worth difference, the net worth impact, when you factor all that in for owning for 20 years versus renting, is $822,000. Over $800,000 net worth difference. Here's the numbers on the slide. If you want to challenge me on these numbers, let's do a phone call offline. Let's talk about it, because there are no guarantees in any type of investment, and there are no guarantees in real estate. But real estate as a primary residence is about your most tried, trusted, and true investment that you can make over a period of time. Okay, house hacking. This is where I want to talk about BAH and your VA loan. You can use your VA loan, you can deploy your VA loan to go zero down on a piece of real estate. You still got to come up with closing costs, so you are going to have some money out of pocket for purchasing real estate. But over the course of your career, an average officer bouncing around at different duty stations on a 24-year career or on a 20-year career is going to receive $800,000 in BAH, in their tax-free entitlement. $800,000. Are you going to give that up to the housing authorities? Are you going to give that $800,000 up to your landlord? Or are you going to use it and do what's more difficult of figuring out how to own real estate as a primary residence and apply that BAH towards wealth building and towards owning your own real estate? An average enlisted over a 20-year career bouncing around at various duty stations. We took Marines and we sent them from San Diego to Hawaii to Camp Pendleton, to Camp Lejeune and then Okinawa, average enlisted is going to receive almost $700,000 in tax-free BAH. If you're just giving that up over time, my opinion is that you're wrong. I want to teach you how to use that tool to benefit yourself and to build wealth over time. There's a couple cool hacks. If you're measuring ROI, if you buy a house as a primary and then you turn it into an investment property, we talk about return on investment. If it's a cash flowing investment, there's an infinite ROI because you went zero down on that piece of real estate. I've seen a lot of Marines. I know a sergeant here recently that bought a house here in Oceanside, and he's renting his he bought a 4-bedroom. He went to the top of his budget, but he's renting 3 other rooms out to his roommates, and they're effectively paying his mortgage. They love doing it because they have the flexibility to come and go on deployment and crash in their own bedroom, and they don't have to worry about maintenance repairs, but he is getting the financial benefit by renting those rooms out. He is having effectively 100% of his mortgage paid, so he has the benefit of homeownership, plus he's saving his BAH. You can also improve the house over time. There's nothing worse than living in a house where you're reliant on a landlord to make the repairs or improvements, and you're not going to want to spend money on a house that you're renting anyway. If there's DIY projects, if you're handy, put those talents to work. I know a ton of Marines that are great at flooring, that are great at cabinets, that are great at countertops, that understand plumbing and electrical. Use that to your own benefit in remodeling your own home and improving its sweat equity, improving the value of your home over time. A couple quick hacks. Okay, who can get a VA loan? Here are the ins and outs of what it takes to qualify for a VA loan. We decided to go with Army soldier in this picture just to make it inclusive. Okay, so eligibility. You must have served 90 days during wartime or 181 days during peacetime. If you've been reservist your entire career, you need to have 6 years of reserve time or National Guard. And then in some cases, there are some surviving spouses that will receive the benefit of a VA loan. This list is not full and complete, but this is kind of the bulk of who qualifies for zero down financing in the form of a VA loan. Oftentimes people come to me with questions on credit. The truth is, and answer this in the chat if you can, is what is the minimum required credit score for your VA loan? I hear numbers all across the board all the time. And the truth is, let me know if you get it in the chat. The truth is, there is no VA required minimum credit score. So Department of HUD has set VA guidelines in place. They do not underwrite VA loans. There are mortgage banks, mortgage lenders, banks like Chase and Wells Fargo that do VA loans. Bank of America, for whatever reason, does not do VA loans. I don't think they should call themselves Bank of America, but there are private mortgage groups and national groups that will underwrite VA loans. They all have things called overlays. That's basically their minimum requirements for credit score. I have seen some banks and some lenders drop down to 580 with extenuating circumstances, or 600 or 620. What oftentimes you most hear is 640. Here's a quick graph on what's low and what's fair, what's good, and what's exceptional with regards to credit score. The great news about your VA loan is technically conventional loans out there, you need 5, 10, 15, or even 20% down for a home purchase, and their credit score requirements are much higher. The other great news about a VA loan is even with subpar credit or average credit, oftentimes the interest rate quote that you will receive from lenders is more competitive than even conventional products with top tier credit scores. Lenders qualify their top tier credit scores for the best interest rates available at 740. There are some quick, easy hacks to improving your credit. Number one, don't have any late payments. I don't even care if it's a cell phone. Do not let any of your credit accounts roll into a 30-day late. You get dinged on your credit, it drops your score, it looks bad from a creditor standpoint. So make sure you're making all your payments on time. Use credit wisely. I recommend not racking up interest on credit card payments. I like the debit card method. I like the Dave Ramsey method. If you don't have the cash to buy it, don't buy it. I don't even like vehicle financing. In fact, the only financing that I'm okay with because of the financial benefits are mortgages for a primary residence. You want to avoid co-signing for your buddies. If you do have a credit card account, say it's $10,000, you want to keep your balance below 30%. So you want to have less than a $3,000 balance on that credit card. That will impact your score if you're using more than 30% of your available credit on that credit card. Also, with old accounts, leave them. If they're paid off and paid in full, just leave them in place. If you delete all of your old credit accounts, your credit score will drop. I have had some people that don't use credit, and unfortunately, they pay for everything in cash, but because they haven't used credit, they actually don't have a credit score. My mom fell into this group, and so we opened up a credit card for her just so she could get a credit score because she wanted to do some more real estate investing and use mortgages to help in that investing. Also, look for errors in your credit report. There's a couple quick, easy apps like Credit Karma where you can look for derogatories. You can also challenge those derogatories, and the creditor will then have to provide evidence that the derogatory has been removed. Otherwise, your credit score automatically improves. So don't just trust your creditors with your credit score. Go on there and look for errors, look for omissions, challenge things, and it will help improve your score. And make sure you pay off old debt. Okay, we're going to talk about home loans quickly. Obviously, we're focused on the VA loan, but I want to give some nuances on why the VA loan is just a more powerful benefit for you than any other conventional products. Number one, like all military, all veterans should benefit from home ownership. Number two, I see military because their lender didn't understand it or their realtor didn't understand it. They're using conventional loans or an FHA loan for a primary residence as opposed to their VA loan, which is by far a superior mortgage product for them. So we're going to talk about some of those nuances. Okay, so who owns the house? In state of California, we are a trust deed state. So basically, if you purchase a home as a primary residence, you will be on title. There will be a trust deed in place for the mortgage servicer, which basically enumerates the debt owed and it's recorded on title. There's also things like fixed mortgages versus adjustable rate mortgages. That's fixed versus ARM. I don't recommend adjustable rate mortgages for anyone. Part of the big meltdown in the last real estate crisis was not only adjustable rate mortgages, but neg am mortgages where people were buying homes and not even paying off the interest due on these homes. I like your good old standard conservative 30-year fixed mortgage, or even if you can afford it and you can hack it, put it on a 15-year mortgage. If you look at the math of a 15-year mortgage versus a 30-year, you're paying a boatload less in interest over the life of that loan. There's also a couple other quick hacks. If you're on a 30-year mortgage and you make one extra payment per year, you're effectively reducing the life of that mortgage by about 8 to 9 years. So you're turning a 30-year mortgage into a 20-year mortgage and saving a boatload of interest and paying it down and paying it off. What I do myself is every paycheck I receive, I take an additional 5% off the top and I throw that on my principal balance of my primary residence. I want to get it accelerated and paid off as quick as possible. I don't want to hold on to a mortgage for 30 years. I like the 30-year amortization. It keeps your payment down, but pay that thing down, pay it off. And then we use things in the real estate space and mortgage world like PITI. It's principal, interest, taxes, insurance. That's the 4 pillars of what's going to make up your payment. The only good thing about interest is it's deductible. The only good thing about taxes is it's deductible from your income. And then insurance is relatively cheap. I use USAA for my home insurance, and they've got some great policies. Okay, number one benefits of a VA loan. First and foremost, you can go zero down. In 2019, they had zero down limits per county. San Diego County had a very different limit than Riverside County, but you would have to look at what your county limit was to know what you could go zero down up to on your VA loan. Great news is they've removed the county limit, and it's all a calculation based off of your debt to income ratios. So the calculation is you take your gross monthly pay, you deduct out any revolving debt or revolving credit that you have, and you can take 50% of your net take home income and apply that towards a mortgage. You have to do the calculation on what interest rates are, and that will spit out a payment for you. And that has to be below 50% typically. Sometimes there are extenuating circumstances where you can go higher on a DTI than 50%. Cool thing about VA loan is for all other mortgage products in the market, you have to pay private mortgage insurance if you go less than 20% down. Your VA loan, it's beautiful. You can go 100% financing, bring in a down payment if you want to. You want to reduce your payment, but you can go 100% financing and you don't pay private mortgage insurance. It can range anywhere from $600 a month to $600 a month on your payment as an additional payment, and it's just insurance because you're going less than 20% down, so you're considered a high-risk mortgage. Also, with your VA loan, they accept lower interest rates, or lower credit is accepted. Depends on the lender. Typically, you'll hear 600, 620, 640 as lender overlays. But if you've got bad credit, feel free to hit me up after this, and we'll talk about some strategies to improve your credit and where a lender might be if you have lower credit, but you need to buy a house. You need to buy a house now. The fourth great benefit of your VA loan is they're typically a quarter to a half point less than what civilians will get in the market for your loan. So, for example, if a regular 20% down conventional loan is at 3.5%, oftentimes your VA loan will be at 3.25 or 3%. So we're seeing right now some of the lowest interest rates that we've ever seen, and it's incredible how low some veterans are getting with their VA loan on interest rates. This chart is just kind of a comparison and an enumeration of what I just mentioned. You have an FHA loan, which is a government loan. You have an USDA loan, government loan, conventional, and VA. And if you just kind of look at minimum credit score, minimum down payment, funding fee, principal and interest, mortgage insurance, and monthly payment, you can see that your VA loan is just hands down a better loan product. And oftentimes that's even with financing more, just because it doesn't come with PMI and interest rates are better. So it's just a superior loan product all around. Okay, I've got a couple examples for you. John Huffstetler, dear friend of mine, he's back in Texas now. He was an infantry Marine out here at Camp Pendleton. During the last real estate bust, we helped him into this condo here off of Alicante in La Costa Carlsbad. He purchased the property out of foreclosure for $215,000. It was beat up. He had to do some work to it. And so he made improvements and put about $35,000 of sweat equity into the property. 3 years later, he sold it for $355,000, and with commissions and closing costs on the back end, his net proceeds, which was not taxable, he put $87,000 into his bank account to transition back to Texas. Just incredibly significant for owning a condo for 3 years while he was stationed here. Here's another example. Andre Evans, he has become a dear friend and is just an exceptional human being. He grew up like south side of Chicago and in the worst of worst scenarios. He and his two brothers all got accepted into the Naval Academy. Two of them are still active duty naval officers. He is currently a lieutenant, and his first purchase was Whistling Lane. That's the top photo in this slide. After selling that, it's a development in Chula Vista. After selling that, he took $40,000 as proceeds of capital gains tax exempt equity that he put in his bank account, and he used that $40,000 towards his next purchase of 2735 Hornblende. What's amazing is he qualified for a $2 million 4-unit multifamily at 0% down financing. He used his $40,000 towards his deposit and his closing costs. He is going to live in one of the 4 units, and his total out-of-cost expense will be $1,500 a month because he's using the other 3 units as rental income towards his mortgage. When he moves out, he'll be cash flow positive. It's just incredible. With the VA removing their down payment requirement or their 0 down limit, veterans can now purchase up to a 4-unit property. You can't go more than 4 units, but you can purchase up to a 4-unit property, and he's financing $2 million on his VA loan as a lieutenant. It's insane. And I'm super, super proud of Andre for just really digging in and really understanding real estate. He's one of those guys that will probably get into real estate or mortgage as well because he's passionate about this industry. Okay, so some other factors with your VA loan. It needs to be owner occupied. It needs to be a primary residence. You cannot use it for an investment. You have to have the intent of taking occupancy within 60 days. The loan is assumable. So if you want to sell the property with a great rate and have someone else assume your VA loan, it's not common that it's done, but sometimes you can get a little premium in price point because you're offering the house with a really, really low interest rate. It's acceptable for multiple property types, so you can buy a condo. We often times have mobile home conversations. Guys want they want to go die hard style and live in a mobile home on 5 to 10 acres. Unfortunately, if it's not, if the mobile home is not on a foundation and affixed in place, you cannot buy a mobile with your VA loan. But they do have VA construction loans that you can obtain where you can actually go develop your own property with your VA loan. And the home condition, from a home condition standpoint, I've seen so many guys buy homes with their VA loan that have just been trashed. As long as it's deemed livable, they can buy a property with their VA loan and it should appraise. Okay, so if you're thinking, hey, based off of my income and my BAH, what can I afford? There's a basic, simple formula for understanding how to do that. And really what it comes down to are your debt to income ratios. So we talked about it a little bit earlier. You want to, if you don't have BAH, go get it or get it turned on as soon as you can. And you want to look at your gross monthly income less any other deductions, monthly minimums on your credits, car payment, credit cards, etc. And that will formulate a DTI. That DTI, that debt to income ratio, will be used to qualify you to a certain number on a mortgage. A good rule of thumb is you want to have a 640 minimum credit score. If you can get up to 740, you're going to qualify for the top tier. So if you have, if your net take home number is, call it $4,000 a month, you can qualify for $2,000 applied towards a mortgage. $2,000 at today's interest rates will probably get you $150,000, $200,000 of financing. Okay, because you can go zero down, you need to understand that it's not zero money for the purchase of a piece of real estate. There are what we call in the industry closing costs. Here's a graph and a chart of your closing costs that you'll want to be prepared for. The other money and considerations that you'll want to factor in are your earnest money deposit. If you get an accepted contract on a home, you got to bring money into escrow as your earnest money deposit that goes and is applied towards your closing costs. You got to pay for an appraisal. You may or may not have a down payment. A lot of guys don't go with down payments as they don't need to. You got to pay for a home inspection. You want to have an inspector go through and certify all the electrical, the plumbing, find out if there's anything that's not to code on the property. And then you've got miscellaneous other closing costs, title, escrow. They're smaller. The bulk of your closing costs are going to be in the form of lender fees. So you're paying for your first 6 months taxes, your first year's home insurance policy, your first mortgage payment. That's kind of the bulk of it. And then there's a thing called the VA funding fee. Often it's a big portion of your closing costs. Here's an example of total closing costs on a $500,000 property. The VA funding fee you'll see is $10,750. The good news about the VA funding fee is you can tack that on to your mortgage. So your mortgage is a little bit higher at $510,000, but it limits the out-of-pocket cost. So if you took that and you tacked that onto your mortgage, your total out-of-pocket costs in this scenario would be $14,000. Quick math for Marines on closing costs, depending on what purchase price is, you want to plan for around 2%. So if it's $400,000 property, $8,000, $500,000 property, around $10,000. This is the money that you'll need to save up to plan for on closing costs. Okay, some common questions. What happens if the market crashes? That's a great question. I love talking with people about that all the time. We're riding high in this market, and it's super, super important that you understand the outcome if the market does have a downturn. Real estate is not a commodity that always goes up over time. It has been for a long time since the last crash, but it's important that you can connect with a real estate professional that can help guide you on what's happening in the market and help guide you on whether it makes sense to buy something or hold off. And it might not make sense. Real estate is not something where you can just throw a dart, go buy something and say, sail off into the sunset. Like, you gotta pay attention to what's going on with real estate. And honestly, you should do a yearly audit of your real estate if you've got one property or multiple properties. What happens if I PCS? Can I rent the property out or Airbnb it? Yes, absolutely. You can rent a property out long term. You can rent it out month to month, or you can rent it out on a short term vacation rental. I've got guys that buy properties here in Southern California. They live in them for 2 or 3 years. They leave them furnished and they rent them out on Airbnb or VRBO, and they actually cash flow these properties even though they've purchased it at zero down. Common question I get is, can I get multiple VA loans? The answer to that is yes. There's a couple different scenarios. You can use your VA loan over and over and over and over again. There's no limit to the amount of times that you can use your VA loan. Purchase a house, sell it, and apply your VA loan on your next purchase. So you can use it over again, depending on your entitlement as well, depending on how much of your VA loan that you use. It is commonplace for veterans to own a house in Lejeune and then come out here and buy a house in 29 Palms and have 2 VA loans out at the same time. I've seen that scenario happen. It depends on how much of your entitlement you're using with your first purchase and then how much you're looking to use for your subsequent purchase. Can I purchase a home with my VA loan remotely? Oftentimes this doesn't happen, but we have had people that have been forward deployed and they purchase a home here in the States. They need a notary that can sign loan documents with them. We have these amazing virtual reality headsets where we basically tour the house with them remotely, and they get a full picture of what the house is like, the neighborhood is like, and the local shopping is like. So yes, you can purchase a home remotely. It's not the ideal method, but if you've got a family coming from overseas and you need to have a house to land in when you get back, I've seen it happen, and I've seen it happen on multiple occasions, and it's okay to do so. I want to hear from you. I want to understand what your questions are. So please feel free to hit me up on your next steps. If you want to dig in deeper on real estate, I would connect with a real estate professional. We have over 100 amazing realtors nationally with Century Residential that are way better than I am at this. So feel free to connect with a Century agent, connect with me after this. We can help you check your eligibility and help you check your credit. We can help you check what you can afford to purchase. We've got a great closing cost calculator that you can kind of plan to get your dollars right, because there are costs involved with purchasing a home and your VA loan. And then from there, you'll want to connect with a mortgage professional that specializes in VA loans. We know a number of them. We know some of the top guys in the country that do VA loans and are oftentimes former veterans or veterans themselves. So we're happy to connect you with a mortgage professional. And then you want to begin your house search. If you get pre-approved for a house, you want to begin a house search with a real estate professional. Real estate is not what it seems. Only 3% of realtors stay full-time after 3 years. 97% do not. The good news about Century Residential is all of our realtors have vast experience and vast knowledge with your VA loan benefit, but all are full-time realtors. And aside from that, they're just amazing people. I can't say enough good things about them. If you would like real estate coaching directly with me, this is my cell phone. Feel free to text me your name, rank, your email, and I'm happy to schedule. I'll send you my Calendly link. I'm happy to schedule 15 to 30 minutes of just coaching. And if you want to talk about finance, you want to talk about mortgage, you want to talk about real estate, or if you just need to talk about life in general, I'm happy to have those conversations. Also, if you're interested in a career in real estate, you're hardworking, you're great with people, you've got high character and a heart to serve military, feel free to hit me up, and I'm happy to assign you a mentor within Century Residential. Or if you're looking to get into the mortgage industry, that's a great profession for veterans that are good with numbers. Please hit me up, and I can get you connected to great trainers and great mentors that might be able to get you working on the next steps. Thank you so much for your service. I appreciate all of you. All of you deserve the American dream. We're so excited to be here and be able to do this with you. God bless, and we'll talk soon.